Hello, and welcome to the Proactive Social Impact Funds LinkedIn Live. My name is Bill Houston. I'm the founder of CrowdMax, a real estate crowdfunding marketing strategy agency. Today, we're going to talk to the Proactive Social Impact Funds team about their origin, mission, and vision, and the use of real estate crowdfunding to expand and democratize their investor base and impact. Dr. Van and Michael, please introduce yourselves and we'll get started.
Okay, thank you. My name is Dr. Kanan Van Williams. I'm the managing partner of the Proactive Realty Income Funds. We're social impact funds, affordable housing, and immediate income. Michael.
Michael Zayas, also partner in Proactive Realty Income Fund. Been with Dr. Van for almost just about 4 years now.
Okay, great. Thank you, guys. So we'll get started right away. What inspired you to explore the potential of real estate crowdfunding for social impact investing?
Great question. I'll go first. So real estate crowdfunding presents a powerful tool for addressing the urgent need for affordable housing while providing a platform for socially conscious investors, to make a tangible difference. However, one of the main reasons is it democratizes the process, allows smaller investors to come in to learn about real estate, to get a feel for real estate investing and what it's all about, and also to see the transformation of communities and the improving of lives.
Michael, would you like to add to that?
I think that was really well said. I would say there's a lot of investors that like to do larger ticket investments, and sometimes that's not needed in some of these spaces, and it allows for smaller investors to get involved in local investments for themselves with 5, 10, 15, 50,000. And our platform is perfect for that. There are times where we'll buy a unit for 50,000 and an investor can see exactly where the dollars are going. So we've talked about doing crowdfunding before. A lot of our retail investors are making similar type checks. And so I think it makes sense in a lot of ways for us.
How has the rise of social impact investing influenced the real estate market?
Well, social impact investing has fundamentally reshaped the real estate market in many ways. One is by prioritizing projects that deliver both financial returns and positive social outcomes. For proactive, social impact investing really allows us to reach a really vulnerable population of the low-income segment. I know we use the term affordable housing. However, we're more social impact housing, that we provide housing security. We provide housing to those who are really in need and not able to attain it otherwise. A lot of our second chance housing.
Yeah, I agree. And I think with social media and with inflation and with some of the challenges that we're seeing, a lot of people look around and they're saying, why isn't somebody doing something about this? And in lieu of keeping money in a bank account or in the stock market that you really can't control the outcomes as much, you could look at these needs in your community and say, I want to do something about that specifically. It took me a long time to make this money. I want to see the impact of it with my dollars and put it into platforms like ours, where we'll go in and renovate areas that have been, passed over or forgotten about. We typically will buy from mom and pops and try to institutionalize the park while keeping it affordable and delivering more dignity to the residents.
Great answer. What specific social challenges can affordable housing address through real estate crowdfunding?
Well, a lot of the societal challenges that affordable housing addresses through real estate crowdfunding is it addresses critical issues such as homelessness, the unhoused, the undocumented, second chance housing, We're able to address housing insecurity, economic inequality, and blight in neighborhoods.
Yeah, and I'd say from an investor standpoint, there's so much dry powder with some of these really large institutional groups, and a lot of times they will just invest in the safest projects that are, brand new or Class A, and typically, affordable housing, or let's call it C class and below. This has been overlooked assets, and so if we can target those areas and do it in a way where we can create value and create a return, there's lots of opportunity, and it's a small enough niche that there's, a lot of times it's just not attractive to big capital. And so it creates a good opportunity for us. It creates a good opportunity for our investors. It keeps the investment local. It keeps the impact local, and it allows us to get in and provide a lot of value.
How does affordable housing act as a catalyst for social change?
It's pretty much summed up in what Michael was just saying about the catalyst, being able to be local with the investment. Additionally, affordable housing, social impact housing is a cornerstone of social stability, economic growth, locally, and at the county level, the city level. It reduces poverty, enhances health outcomes, it fosters inclusive communities, and we create environments where individuals can achieve upward mobility and where communities can flourish collectively. Additionally, I'd like to add to that, we typically invest very close to transit centers that fosters job growth in the communities we invest in.
Yeah, and I would just give some examples of some of the places we've had our mobile home communities, for example. The main big city is Charleston, South Carolina, which has seen a lot of economic development. Housing costs have outpaced increases in labor and wages. And so you see this disconnection between what people are making and the cost of housing. And so we were in Orangeburg, South Carolina, which is 40 minutes to an hour outside the city. And the increases in housing costs push the working class outside of the city, and it adds strain that they have to travel into the city for their work. In our experiences, a lot of our residents were nurses or single parents. And if we can find more opportunities to have affordable housing also closer to population and job centers, I think that that's really important. So we're also in Chicago, we're also in Las Vegas, but land costs being up and housing costs being up has pushed affordable housing options outside of a lot of cities. And it's important for people to go into some of the more densely populated areas and also provide affordable options there.
Great. What are the main advantages of investing in affordable housing through real estate crowdfunding platforms?
Investing through crowd platforms, it offers numerous advantages, primarily access to diverse portfolios of projects, lower minimum investment requirements, which is really huge, smaller check sizes, and the ability to contribute to meaningful social change. Investors can benefit from steady returns and the satisfaction, as Michael was saying earlier, that their investment dollars are making a difference. And go ahead, Michael.
Yeah, I think as we've seen some of the laws with the Jobs Act, and we've seen the rise of technology driven investments. Now an investor, let's say someone like my dad who has his own business and has some surplus cash, but it, might not be able to write $1 million checks, but could do $50,000 or $150,000 checks. He can go through a crowdfunding platform and go direct previously he'd have to have a financial advisor at Morgan Stanley who would then work with somebody who then would work with an opportunity like us. And so there's, 1, 2, or 3 levels of intermediaries. And now with crowdfunding platforms, people can see direct deals that have been pre-vetted, and they can go in and they can take what they like and maybe split it between a couple deals and go directly into those deals. So I think that this is a new wave of doing things, and I think more people will come on board with these types of strategies instead of just parking money in a S&P index on the stock market.
Great answer. Because a couple of questions that I had, and you kind of touched on those already, is about diversification and the transparency that crowdfunding platforms kind of bring to the table. So that was a great answer. Thank you very much for that. So how can social impact investors engage with local communities through real estate crowdfunding?
Social impact investors are able to engage with local communities by supporting projects that prioritize local needs, collaborating with community organizations, and participating in community meetings and events. As you know, most things are online now. And so, for example, where an investor invests at, if there's city planning meetings or other meetings, they can participate by Zoom or in person if they're local. And this involvement ensures that the projects are aligned with the community's goals and contribute to long-term prosperity.
Could I have that question again, Bill?
Yeah, sure, absolutely. How can social impact investors engage with local communities through real estate crowdfunding?
Yeah. So, in our experience, we've had investors from all around the country. I think it works the best. I mean, one of the greatest things about a real estate investment is that you can drive by something and say, hey, I was involved in that. And I think with the crowdfunding, it organizes all the investment docs and everything and makes it simple for an investor to look and say, okay, would I like to do something in my backyard if there is stuff available? So I think that is a really important thing. And I think depending on the crowdfunding platform, how many people are on there and how often, they're converting and making investments, it's always a little bit easier. And I think people are more likely to invest in their backyard as opposed to someplace sight unseen on the other side of the country.
Great, thank you. So in a very general way, and maybe even looking back and not looking forward, what types of returns can investors expect? What type of returns have investors seen from affordable housing projects? And the reason I ask that question is a lot of times people make the assumption that if it's affordable housing, that they're not going to get, decent returns from that. And I know that you guys have done a lot of projects. Can you speak to that?
Yes. So what kind of returns can they expect from affordable housing projects? Typically, part of the return is reduce homelessness, improve community well-being. That adds value. On a financial basis for proactive, we've had really decent historical returns because we buy distressed properties and we buy them well below market. So we've had some really good returns, and I'll let Michael speak to that.
Yeah, I was going to say, I mean, if we just used a brand new mobile home as an example, if we can buy it, a lot of times the manufacturers know Dr. Van and they trust him, and so they'll say, hey, we have 15 units that just came available. Someone put a deposit on and then didn't perform on. Would you guys like them? We'll give it to you at a discount. We buy it, maybe we get it at 15% discount. We might be bringing 3-bed, 2-bath home into a park for, call it $65,000, and then we have to set it, and you could sell that home the next day at a 15 and it would still be affordable, and maybe you could even charge full price, which would be 130, something like that. So with the homes, we have a pretty great margin that you can turn pretty quickly. What we've done as an extra step for our residents is sometimes we'll also finance their purchase of the home from us, or do a lease to own. But otherwise, we can turn that capital pretty quickly. And then we make money on the rents of the lots as well. And just as an example, our biggest park to date that we did a full cycle on, we bought it for, we'll say 1.8 million with fees and everything into it. And in a little bit more than 3 years, we ended up selling it for more than 5 million, 5.2 million. And we took it from a mom and pop that hadn't been investing back into it. There was a lot of deferred maintenance. We were able to do all that and turn it around. Dr. Van is great at making sure that he provides value at a discount as well. You know, typically we're not making distributions to ourselves along the way, so we're in the boat with our investors, and we're only getting paid if there's a successful outcome. And then when we sold to an institutional group, they were willing to come in and buy it because there was still value to be created. So I think there are all these underserved and overlooked little pockets, and we've been able to specialize in that, offering our investors north of a 20% return annually, which ends up being like a 20% plus IRR. Some investors have done even better than that because we offered them different deals where part of it was debt, and then they got to also get some of the upside if we sold units. We're trying to have more of a set return now for our investors, but there's lots of value to be created if you know what you're doing. I would say too, in our portfolio, we have growth properties, typically in the Southeast. We've also looked in Texas and markets that are growing, and there's good demographic growth behind them. And then we also have markets like Vegas and Chicago where we're getting fixed income from government groups. So we can back into, based on what we know a government will pay to put a tenant into a unit, we can back into what we need to buy the park or the units for using a yield on cost. And so we know there's always a certain amount of income to be made, and we can split that between ourselves and an investor and offer a good return while keeping community affordable and doing a service to the city, almost like a public-private partnership.
Yeah, and I'd like to add a little bit to that. On the park that we sold in Orangeburg, is that we were aligned as it relates to social impact and affordable housing. We sold it to a publicly traded company that is also happens to be a social impact affordable housing group. And we did a follow-up 16 months later. Prices were still low and very affordable for residents, especially for that area that experienced a lot of poverty. As Michael was saying, yes, we do get some government subsidies on a lot of our properties, and we work to keep the prices affordable and reasonable for our residents and end users. And even when we sell homes on the dealership side, that's a retail product. We can sell it, for market rate. However, when we do sell into parks, we typically sell to our residents at a very slight markup, not more than 10%, so that we keep with social impact and we keep with affordability. However, while making a return for investors, because that is very important.
Okay. What, if any, tax incentives are available for investors in affordable housing projects?
I'll give a short answer on this. Michael is more versed in that area. I'll just give you an example of Chicago, Illinois, where we have properties, Cook County. When we rent to people who have Section 8 HUD vouchers, our taxes are lowered on each individual property that residents are in by 20%. There are some tax credits available and tax incentives. However, that's more Michael's wheelhouse than it is mine.
Yeah, I'll say we haven't really led with this, but depending on an investor's needs, uh, mobile home parks are one of the best real estate assets for taking depreciation. So there are some depreciation benefits that can be passed on to our investors. So say an investor has capital gains taxes that they need to pay, they can offset that. So if we're paying them, 9 pref, they're making 9% a year, and then they also get some of the upside. We can also pass on some depreciation, which could help their overall tax basis, depending on what they've got. We haven't really marketed that well, so I thank you for bringing it up, because it is one of the big advantages of investing in mobile homes. But it's something that also has to be worked on with an investor or with their tax advisor to make sure that that all of that's done correctly.
All right, thank you, Michael. What are the long-term financial benefits of investing in affordable housing?
So they include steady rental income, appreciation of property value, the social impact that affects the resident, who's most important in the entire transaction. It creates a lot of stability. It creates economic opportunities, job growth, sustained occupancy, and reliable returns over time.
Yeah, and just to add to that, I've worked quite a lot in the past in the hospitality industry with hotels. Hotels can be a great asset to make money on, but as you've seen with the pandemic and with interest rates going up and inflation and some of these other macro factors, hospitality has struggled quite a bit, and it's because their leases renew nightly, right? So that's the most that you can kind of project is, with some other assumptions, but that's really it. You've got nice nightly leases. With multifamily, with apartments, usually you have a year lease. We do something similar with the mobile home parks, but at the same time, these units can't just get up and leave. And so I think there's a lot more stickiness with our residents than what you see with other asset types. And so, while it's a different model, apartments have gotten a lot of love over the last couple of years, and there's been more capital moving into the mobile home parks space as well, mobile home community space. But I think it's even the cash flow stream is even more secure, because once a resident moves in, and especially if they're bringing their own house, it's much more difficult for them to leave, and so it's easier to bank on that cash flow stream remaining in place over the long term.
So how can investors conduct thorough research and due diligence on crowdfunding platforms?
Yeah, I think it's up to the
Go ahead,
sponsor to provide as much material as possible. Because at the end of the day, the crowdfunding platform, it does some of its own due diligence, but it's really like a marketplace for people to come and share their products. And so I would say any investor that's looking to invest has to have a good level of comfort with the sponsors themselves, their track record, their financials, if they think the business model is feasible, if there's past performance, and also we always try to show investors that we've got relationships with different lenders, that we have gone full cycle on a bunch of our properties, and that good, bad, and ugly, that we communicate a lot with investors. I think all of that is important.
Hey, next question here. How can new investors start small and gradually increase their investment portfolios using real estate crowdfunding?
New investors can begin. They can start by allocating a modest amount of capital, say $500 or more per project, to a few selected projects that meet their criteria and align with their social impact goals, align with their affordable housing goals, and they can start to gain familiarity with the process, build confidence, continue to educate themselves. Ideally, they'll want to go with a platform that has a lot of information and that's aligned with them. Michael?
Yeah, I think any investment that you make, you have to be prepared that you could lose it all, right? That's what every PPM, every disclosure says, is that there's no assurance of return, and if you need that money, do not invest it. But if you have a surplus and you want to put it to work and you want to make more than what you'll make in your bank account, try it out, start to feel comfortable with the process and learn more about it, and then you can try to give that same manager more capital, or try a different manager and see what they do. If you don't know much about real estate, there is a lot of resources out there. I think a lot of people find different organizations like Bigger Pockets, or I used to be really involved in Urban Land Institute. There are a bunch of great associations as well that you can follow, and you can get research from them and see trends, and even things like Zillow and other websites provide so much research and data points now that you can look and say, hey, if I was doing this myself, how would I do it? And do I think that these guys can do it better than I can? And, we're always available for a phone call. And I know that people like that. Dr. Van's really great at reaching out to some of our investors, at least on a quarterly basis. And if he's in town, he'll stop by and see them. And all of that, I think, goes a long way to trusting somebody with your hard-earned cash, and continuing to trust them more and build a relationship.
The personal touch is definitely important. What strategies can investors use to stay informed and engaged with their crowdfunding investments?
Investors should regularly review updates from the crowdfunding platform, participate in investor meetings, engage with project managers, monitor financial and impact reports, and as you said, and as Michael was stating, and also picking up the phone, either a text, email, schedule a meeting. In the case of Proactive, we're just a phone call away. It would be myself or Michael or Tony or Jesse or Rocco or Wei Yi that we newly added to our team. Michael?
Yeah, and it goes back to an earlier point about impact investors and making local investments. You can always stop by a property. People who are trying to buy a property will do this, and they pretend like they want to live there, and they do the whole thing. I mean, I'm sure investors can do that as well, just to test out how customer service is, or some of these things. So, I mean, if you are close to where the property is, you can go and check it out, and that can be another way that you can vet what the information that's being shared on the crowdfunding platform is telling you.
How does community engagement enhance the impact of real estate crowdfunding projects?
Excuse me. Community, I'll take a shot at this one. Community engagement ensures that projects are designed to meet local needs and fosters a sense of ownership and support among residents. And it's pretty much the conversation we've been having all along. It's also a collaborative approach that leads to more successful, sustainable projects that really benefit the community, enhance social impact and financial performance. I cannot overemphasize the social impact component enough, because social impact, you have a lot of eyeballs on a deal. It's not just the investors, but it's the city relationships. And for Proactive, we have relationships with the city, with the county, local governments, local homeless shelters, advocates, nonprofits, and other community agencies that support what we do. We have waiting lists that call us on a very frequent basis and say, hey, do you have units? Who can we get in there and when? Michael?
Yeah, and I would say, we've done a pretty good job getting to know some of the residents in our park. Obviously you can't get to know everybody, but and then when we've needed to do promotional material, people are always willing to talk about their experience and what they've seen before and after. And we've got some of those videos, I think, on our website and other places. And all of that helps then build confidence with investors, who then might put more money back into those communities that they wouldn't have been aware of in the first place. So I think community engagement's very important. It's a differentiator. There are other people in our space that they'll just go in and they'll just raise costs and take something that was affordable. Let's say it's a C-class community and take it up to like a B plus, and then they price people out and the engagement's not there, and they'll make a couple quick bucks, but then eventually somebody will have that community and it'll be stuck because it doesn't have the right market fit. So what we try to do is we try to go in, we try to get to know the residents, try to raise the commitment level in our properties where people see the improvements and then they buy in as well. And we keep it affordable so that we're not pricing people out, and we try to improve without pushing the limits too much where we're now, it's no longer a benefit to that community.
How can social impact investors monitor and adjust their investment strategies over time?
So restate the question.
Sure. How can social impact investors monitor and adjust their investment strategies over time?
Okay, so investors, they can monitor their investments by tracking a financial reports, but financial performance of individual projects and social impact metrics. I'm glad you asked that question because we hadn't hit on this yet. Michael and I, we have a social impact report from Morningstar, the fund rating company. So Morningstar has a division called Sustainalytics, and so Proactive has for all of our properties, whether they be in our regular fund, our crowdfunded fund for Rancho Affordable Living, or be in our Opportunity Zone fund. We have social impact reports that track our social impact metrics. A year from now, 9 months to a year from now, we'll have a follow-up annual review to measure more of our social impact and how we deploy dollars and how we impacted lives. So other ways our investors can stay informed about market trends. They can join impact-minded organizations that track social impact in the marketplace and adjust their strategies based on that type of information. And Michael can speak to that also.
Yeah, I think if you are impact driven, it's hard to tell what is real versus just lip service. There are lots of groups that will say, that they're ESG or they're this or that, and then you find out how they're classifying themselves, and it's really something that any normal company could do, and the real differentiator isn't there. I think having the Morningstar sustainability analytics report shows investors, in our case, they can feel and touch sort of the financial return and the value creation, and then the report outlines the real impact that's been generated. So I think that that's important, and investors, over time they'll see that, and they can tell if their dollars are actually doing what they'd like them to do, which is make a return and also see lives changed. So that's what I'd say.
All right. So for our final question today, What steps can potential investors take to maximize their social impact through real estate crowdfunding?
They need to focus on projects with clear, measurable social objectives, such as what we have at Proactive. And I'm not being biased here. It's just that we measure our impact. Our impact is very important. And we met with one of our investors. We were recently at a conference, and one of our investors from Four Star Wealth was really hammering the point. We met in the evenings, and he was saying, you know, Dr. Van, you and Michael have a product that is not in the market, and that you provide immediate income, and that also you really serve the low income community. You just aren't, you know, you're not using the banner or the term loosely affordable housing. He says you're truly working with vulnerable populations, providing second chance housing, things of that nature. So investors that would like to maximize their social impact through real estate crowdfunding, they can go to our offering page, Testing the Waters, that we have on Silicon Prairie. Our Reg CF will be fully filed and up and operational by next week, end of next week this time. And they can see what targeted returns we offer in the areas of financial. However, most importantly, social impact related. And Michael, go ahead.
Yeah, I mean, I think that was really well said. I think the other thing that I would say is, you know, an investor who is mission driven, that wants to put money into things that maybe is outside of like a typical investment. You know, people invest in the stock market because it's been made so simple. You know, you can sign up for a Robinhood account and, you know, invest in micro shares of Tesla in, you know, 5 minutes probably. And I think crowdfunding for real estate is starting to compete with that as far as, you know, transparency and convenience. And so if you can give Tesla your money because they are making streets cleaner without emissions, you can also find certain real estate managers that can make the streets cleaner because we're putting new units into a place that was barren before or didn't have any homes on it, and provide that life that wouldn't have been there otherwise, and that vibrancy, and bring communities back together that you know, that looked completely different before. I mean, I think Dan can tell you, in Chicago alone, I mean, we've owned quite a few buildings there, and they were abandoned.
Mm-hmm.
They were eyesores, and they you know, were run down, and there were people squatting in them, and you know, we've been able to make those livable again, and make somebody proud to show their friends that that's where they live, and that they can live there and have a good deal, and be close to job centers. That's close to an Amazon fulfillment center. And so I think we're very mindful about those other value adds, and we really want to help people who are willing to work to have a safe and clean place to come home to that they can be proud of. So investors, I think, if they're willing to give real estate crowdfunding a chance, and if they can be persuaded that some of the real estate deals that are shown can produce those social impacts, you know, with third-party reports or with track record, they should definitely take a hard look at it, because they can make a real lasting you know, effect on people's lives, instead of maybe just giving it to a big company where they might not even need the capital. So that's what I'd say.
This is a great episode, a lot of information. Last thing here, if someone wants to connect with you guys, someone wants to connect with Proactive Social Impact Funds, how can they do that? Where can they find you guys, and how can they connect with you?
Yes, we have an 800 number, 1-800-626-2089, or they can go to our email is invest@proactivefunds.com, and also our website is proactivefunds.com. Michael?
Yeah,
And
and
they
we're on
just-
LinkedIn as well, and I think on the offering with Silicon Prairie, our contact information will be there as well. Always available to set up a call or to get on a Zoom.
Okay. Are you guys on LinkedIn, YouTube?
Yes, Proactive Social Impact is the name of our channel.
Right. Great. Thank you, guys. Really appreciate it. See everyone Monday at 12:30.
Yes, sir. Thank you. Have a great weekend, sir.
Thank you.
Bye, guys.